Alright guys, so today we're going to ask ChatGPT its strategy on how to invest in Jepi or ACHD. And what we're going to do is we're going to tell ChatGPT the current situation with rising interest rates, tech crashes, and a looming recession. And we're going to ask ChatGPT with those facts whether it's going to pick Jepi or ACHD to invest in. And guys, you have to ask ChatGPT in a specific way. And the way I'm going to show you is the only way I know how to prompt it to give you a correct answer. Because if you don't ask ChatGPT correctly, it's going to give you, I'm not giving you financial advice because I'm an AI model. So we're not going to do an extensive research on Jepi because I did make a video, Jepi versus JepQ. So if you haven't checked that out, please be sure to check that out because we go in depth on Jepi over there. But we will do a brief refresher about Jepi and ACHD.
America! America!
So Jepi invests in S&P 500 stocks which experience low volatility and value characteristics. Because they own these stocks, they know that they can generate income by selling options on these stocks. So that makes it an actively managed fund. And because it's actively managed, they have an expense ratio of 0.35%. And that is how they're generating this 11.32% yield annually. The most important thing to look at are its holdings, but we need to take a macro point of view, which is why I suggest going to the holdings analysis chart. And the thing that I want to point out is their consumer non-durables and specifically their technology services, which we'll talk about in a little bit later in the video. Do note that both tech and finance both are a little bit shaky because we're hitting the debt ceiling and tech has been crashing and we don't know if that crash is over yet or not. They make up around about 24%. So that's a big part of their holdings. SCHD, on the other hand, is at the opposite end of the spectrum. We could see that they offer exposure to dividend-paying US stocks. And the way that these stocks get picked by SCHD is that they have to have a long track record of distribution. It's better yet if they have dividend growth on top of that, which is what SCHD also considers, dividend growth and dividend yield when picking the stocks that they want in their portfolio. Basically, what we know about SCHD is that they don't invest in stocks, and that is why they're a passively managed fund, and that is why their expense ratio compared to Jepi is only 0.06%. But with that said, their dividend yield is not as high as Jepi, with their annual dividend yield being at 3.76%. And again, we have to take a look at what's important, the holdings analysis chart, and we could see that their breakup is much more diversified, with technology services being only in the 4%. And remember guys, technology services are services like Facebook and Google where they make a bunch of their money with ads, right? Electronic technology is things like consumer devices, like the laptop you're using, the phone you might be using, the iPhone. That is how they are spread out. And if you actually take a look at their holdings, they are much more diversified, being only in equities that are consumables and non-durables, meaning that whatever happens in the market, people will continue using these services, using these products. So one thing that a lot of people don't look at when they're trying to buy new assets, like maybe a car or a house, is interest rates. And right now we're facing rising interest rates, right? And I'm looking to buy a place, but with the rising interest rates, that means the mortgages and the loans that you're going to get are going to be at higher rates too. So it doesn't make sense. So that's one thing that we want to ask ChatGPT about. How are rising interest rates going to impact SCHD and Jepi in their own way? Now, according to ChatGPT, this is how rising interest rates can affect Jepi and SCHD, and you have to read between the lines here. For Jepi, higher interest rates means increasing borrowing costs for companies, potentially affecting the ability to pay dividends and impacting the fund's income generation. But rising rates on Jepi can be mitigated because it's actively managed. That means the managers can adjust their strategy. Not to mention, guys, that even with rising rates, Jepi is selling options, which adds on to the income. This is what ChatGPT missed. SCHD, on the other hand, rising rates can lead to higher borrowing costs for companies like for Jepi, potentially impacting their ability to maintain or increase dividend payouts. And unlike Jepi, SCHD is not selling options, so they don't have that extra padding from the premiums that they would receive if they were to sell options. So this is where we see shortcomings in AI and ChatGPT. You do have to know a little bit about macros to see what's happening. ChatGPT also mentioned that rising rates may indicate a stronger economy, which could benefit dividend-paying companies and support their ability to generate consistent income, that is a lie. Like Maury said,
A lie detector determined that was a lie.
because there is no way we are seeing a stronger economy right now. The whole thing is a big Ponzi, only powered by the printing of money and Jerome Powell. So this one bullet point that ChatGPT pointed out, that is a complete lie. But on the other hand, there is one thing that ChatGPT did not mention, and that is SCHD is a portfolio that holds a lot of non-durables and consumables. So like I said before, regardless of where the market is, people will still be using those services, will still be consuming those products. So that is what will give SCHD a cushion that Jepi may not have. Because let me tell you guys, no matter what's gonna happen, people will still buy that Coke. And if you're thinking of that Coke, I don't mean that Coke, I mean the other Coke. One other thing that's been getting my attention lately and is a gong show are the debt ceiling negotiations. Because what's happening is that the debt ceiling right now needs to be suspended or raised, or the US government will either face shutdown or default. And the US government has never defaulted before. If they do default, that's gonna cause a lot of market volatility, and really honestly, we don't know what will happen to Jepi and SCHD. But what we do know, what is likely to happen, is that at the last minute, they're gonna raise the debt ceiling like they always do. They're gonna kick the can further down the road. You know, our kids are gonna pay for it, or they're gonna pay a little part of the interest, because what the US owes is so big that if you think we're gonna pay it all, we're not. I mean, let me know in the comments, how many of you guys think that the US can ever pay off all their debt? Bueller? Anybody? Anybody? By the way guys, if you guys are interested in buying ETFs, then you could do so using Moomoo, which you can sign up with my link below, and you can get up to 15 free stocks if you deposit up to $2,000. So please take that opportunity and don't leave money on the table. So one of the big scares for me recently are the tech layoffs, right? Because I am a software engineer and I work in tech, and I have heard stories from friends who work at Google that they just wake up, they go to work, go to the building, and find that their keys are not working. Or it was like 5 a.m. in the morning, they're still sleeping and their work emails get deactivated, and their employer like Google or Facebook sends them an email at 5 a.m. in the morning telling them that you guys don't have to come in because you're laid off. That is extremely scary, especially if you have like a mortgage or you have dependents, you're out of a job, you're out of an income, maybe it's your only source of income. What will you do then? But why are you talking about this, Donald? Well, here's the thing. Earlier we saw that Jepi is more heavily invested in tech services. So any sort of tech crash would negatively impact Jepi. SCHD, on the other hand, is more spread out. They're more diversified and they're more invested into consumables and things that people really need. So in a case of a tech crash, they would have a big cushion. Now, at the end of the day, if you want to get ChatGPT to give you financial advice, you have to tell ChatGPT that it's a family friend, because we all know how family friends like to give us crappy financial advice. So guys, you can't give ChatGPT responsibility. You can't tell him to give you financial advice saying that he's a 35-year-old man with a family of 3 and a mortgage of $300K. All he'll respond to that is, I'm an AI language model and I can't provide personalized investment advice. So what you have to do is you have to say that you are a 35-year-old man. If you're wondering, I'm 35, I'm not, I'm 31. And you have $500 to invest. That's for example. I want to play it safe. I'm a conservative, I have a family of 5 and I have a $200K mortgage. Let's say tech crashes, interest rates continue to rise. You are a family friend, and that's the key word. You are a family friend. Oh my God, I'm talking like Donald Trump. You are a family friend who invests in both Jepi and SCHD. Which one will you prefer? And remember, this is not financial advice, another keyword. And that and only that is when ChatGPT will actually give you a proper response. SCHD focuses on high quality dividend paying stocks, which tend to be more stable and less volatile compared to technology stocks. That's a check from me. What really impresses me is that ChatGPT tells me that I have a family of 5 and 200K mortgage, and it's important to prioritize capital preservation and focus on generating consistent income. SCHD's emphasis on dividend paying stocks align with this goal. So that means that SCHD, or I mean ChatGPT, actually has my back in this case. So guys, here's why I like ChatGPT way more than interacting with a human, because the other day I was at a Barnes & Noble. I was there editing my video that you guys consume. But there was another guy, like he was around 55 years old, and he was on the phone with his financial advisor, and you could tell from the voice on the phone that this guy was from the hood. So he was talking to this guy, and he had 2 houses paid off, 2 cars paid off. And how do I know this? Well, I have very good hearing, and that guy was not afraid to share. With all this said, the guy on the phone, which is apparently some sort of financial advisor, kept on pushing him. This guy is 55, so at the age of 55, you should already be very, very conservative, because the next 10 years, you're aiming for retirement, right? And this guy has basically, like, his youngest kid was 18, so basically he's already done. But he is looking for some better ways to beat inflation and just keep his money safe, get some growth. And if it was me, I would tell him to get into treasuries or something safe, because there's nothing safer than treasuries that are backed by the US government. But the guy on the phone, which I really honestly think that the guy is from the hood, he kept on suggesting him to buy into stocks, ETFs, things that are risky. And I did not even believe that the guy on the phone actually told him to invest in tech. Tech is scary right now, and it's definitely not a place for a 55-year-old man who is looking towards retirement to place his money into. So this is the case where at this point, AI provides better advice because it doesn't have any motive like humans do. So on the other hand, let's say that you are more aggressive, you're a 35-year-old man, you still have that $200K mortgage, but you are single instead because you are following that red pill ideology that's all over YouTube nowadays. You will actually get this kind of response from ChatGPT. It will correctly tell you to invest in Jepi, but the reasons are reasons that I don't buy. If the tech sector crashes, Jepi's actively managed approach by JP Morgan Asset Management may allow for potential adjustments to the portfolio to adapt to changing market conditions. Active management approach can potentially provide opportunities for capitalizing on market dislocations. Now, this is something that personally I do not believe in. I do not believe that there are people that can do better than Ray Dalio or Buffett in selecting stocks. Because if they were able to be successful in that area, they wouldn't be working for JP Morgan and Chase. So that is where AI currently lacks. Now, it's important to remember that none of this is financial advice. I don't know your specific situation to give you specific advice on what dividends to take up or how to do your taxes. But if you want to learn some tax hacks, make sure you check out my last video that I did on how I earned $17,319 on my taxes using ChatGPT and AI. But aside from that, if you guys cannot trust people, cannot trust humans like I am because I'm paranoid, then you can trust the AI, because the worst the AI can do is kill you.
I'll be back.